Hello everyone, I'm Marty and welcome to my April 2022 real estate market update for Vancouver. I'm going to jump right into the sales ratio discussion, and as many of you will recall, the sales ratio determines how active the market is, and it's basically just the absorption rate, how quickly things are selling in a given month. So if less than 11% is selling in a given month, we're in a buyer's market and there's downward pressure on pricing. If it's between 12 and 20% absorption rate, we're in a balanced market. It's not favoring the buyers or the sellers. But if over 21% is selling in a given month, we're in a seller's market and there's upward pressure on pricing. So that's the metric I use to determine how busy the market is. Let's have a look at our market speedo video. Basically what's happening is the inventory rates are starting to increase, albeit slowly, and they've got a long way to go to catch up where they need to be. There's a big deficit in the amount of listings, and we're currently at a 50% sales ratio. Now remember, overall, we need 21% to be in a seller's market, and we're actually at 50. So the market's still hot. Now compare that 50% to March at 42%. Overall, for all the product, the market's gotten a little bit hotter since the previous month. Overall, listings are down year to year. No surprise there. Total sales are down, but overall, for all product, we are up by 10%. So that's pretty well a summary year over year compared to where we were last year and of course last month. So let's look at my highlight table for detached houses. Sales activity year over year, volume of sales down by 34%. However, benchmark price year over year from this time last year, detached houses in Metro Vancouver are up 23%, significant increase. And last month alone, overall in Metro Vancouver, detached home prices went up 3.6%. Be careful with that though. Not every house went up 3.6% in Metro Vancouver. There are hot spots and there are cold spots. For example, larger lots with older homes, extremely quiet right now. Entry-level homes between 2 and 3 million, very hot. You'll see that as we get into the areas a little bit later. Let's look at attached townhomes and duplexes. Sales activity year over year, of course, down. The volume of sales are down by almost 30%. Benchmark price up even more than detached houses, up by 28%. Very hot product, that townhome market, from an affordability point of view for families. And last month, prices jumped up 4.4%. So ridiculous monthly variances on the prices. If we look at attached apartment condos, again for Metro Vancouver, overall volume sales down 14% year over year. Benchmark price from last year up 17%, significant, and a big jump last month of 3.4% in pricing for apartment condos. So a lot of action over the last month. Again, remember our sales ratios, over 21% sellers market, under is balanced, down to 11%. Let's look at the specific product. Detached houses, Vancouver West Side, we are just at the border of a balanced market and a seller's market. We are up though from last month at 19%, slightly more activity. Again, be careful with that figure because there are very hot spots and there are some cooler spots. So overall, our detached housing market is a little bit busier, but it depends on the product. And if you get down to the entry-level product, look at this, 2 million to 2.25, 200% sales ratio. Absolutely insane. Whereas if you go over 4 million, we're down at 10%. So that's quite interesting as well. And then neighborhood specific as well. We see some variances. But overall, detached houses are still extremely active. Condos and townhomes, Vancouver West Side, 56%. That's an extremely busy product right now. That's up from 44% last month, and we are up from our peak of last April at 46%. So this particular product in the west side, townhomes and condos, very hot right now, hotter than it's been since the pandemic started. So let's look at condos, townhomes downtown, a little bit cooler than the west side, 42%, no change from last month. Let's look at detached houses east side, 40%. Definitely prices continuing to increase there in detached houses. Vancouver east side, we're seeing some really high ratios, right up to the 3.5 million mark on the east side. Yes, 3.5 million on the east side, ridiculous. And we're seeing some great variances, but really good ratios throughout the east side for detached houses. Very hot product over the last month. Condos, townhomes on the east side. What's going on? 75% sales ratio. That's a ridiculous figure. That's up from 61% last month. We're still quite not at that peak of April last year at 84% record, but very, very close. Ridiculous sales ratios on all the price bands for condos, townhomes, east side. So you see that entry level and middle level product is very, very hot still. Many couples, single families buying into that market, and that's fueling the market as the rates start increasing. We'll chat about that very quickly shortly. So what's happening in the suburbs? Month-to-month variances. Okay, it's a mixed bag for detached houses throughout the greater Vancouver area. About half of the detached houses sales ratios are up and the other half are down. The circled red neighborhoods in the outlying areas, Cloverdale, Surrey, and even New Westminster and Burnaby sales ratios are down from last month. Very interesting for detached, but generally a mixed bag. For attached, you can see the majority with the little green arrows in most of Greater Vancouver, all the way out into the Fraser Valley is up, and only a couple areas, West Vancouver, North Delta, Tsawwassen, Mission, and Maple Ridge sales ratios are down. So generally, again, that entry-level product has been busier all the way outside of the Lower Mainland area. So what's next? Some forecasting. Again, our three drivers. Consumer confidence. So buyers are selectively buying in certain product and price ranges, and there's a lot of them, but they're also aware of the looming cooling off period that our provincial government announced. That's coming. And they're also watching the interest rates. So there's a bit of a mass flurry of people wanting to buy before those rates go up, and that's fueling the market. Cost of borrowing, as I mentioned, mortgage rates are continuing to rise. More on that later. Inventory levels. Okay, so inventory levels are increasing, but very slowly. Now remember, we're at a 30-year low for interest levels, and we got thousands of listings to make up before we're in a balanced market. So this has not had a dramatic impact on our market yet, even though it's changing. So let's look at the consumer confidence metrics that I'm tracking. Employment back up well past the pre-pandemic levels. The unemployment rates low. We're down at 5.1% for BC. That's almost below where we were pre-pandemic. Retail sales, of course, are up. This is an interesting stat that does impact consumer confidence. People are aware of the global environment. And one of the great graphs I got recently just sort of shows where we are on a global policy for greenhouse gas emissions. And a lot of the countries are actually going towards more solar, wind, and electric vehicles, and that has adjusted our forecast for the temperature increases. And before 2015, we were looking at a prediction of 4 degrees, and right now we're actually right down to about 2 degrees if we keep going By 2100, I think I'll be about 140 years old at that point, but still our kids will be around, and the kids' kids, we want to get below 1.5%. So things are looking better. I think a lot of the electric vehicles have a lot to do with that as well. So that's good. That's helping consumer confidence. Got off on a track there. Cost of borrowing, let's talk about the elephant in the room. Now, Canadian inflation, 5.7%. It's still up there. Look what happened in the US, 7.9%. Of course, they're pulling out the oil from all the reserves. The interest rates are climbing. The Canadian bank has no choice but to increase their rates. I'll show you in the next slide to get this inflation down. So both the US and Canada are attacking this quite aggressively. All the major Canadian banks are pretty well in line, predicting a 50-point rate hike next week. That is a big jump. That's definitely going to have an impact on our market, so let's watch for that next week. The government really doesn't have much choice. Inventory levels, again, we're at a 30-year low. What that means is we're about 25,000 listings short in the province of where we should be for a regular balanced market. So we've got a lot of listings to pick up in order to level off that demand and meet that demand. And you can see, though, that is starting to happen. We've got new listings starting to climb, not steeply enough yet. And if we look more closer to home, Vancouver West Side inventory levels for houses, you can see it's been creeping up since December. And I mean creeping. It's not a dramatic increase. We got a long ways to go. We've only got a 40 listing jump from last month. And if you look at attached West Side inventory levels, condos and townhomes, you can see, again, creeping up since December, but only at 12 new listings in that category in the West Side since last month. So not enough to make an impact on the market. However, we are at our highest average prices in history. Detached, 2.269 million. Attached, we're at 1.276. Average home prices in condos, $835,000. So, but you can see, look at that little crest up here. Whoop! Maybe that's a start. Who knows? Nobody can tell the future. Market conditions across the province, you can see we're overall well into a seller's market still. Now remember, the more affordable the product is, the higher the activity because more people can buy it. That pyramid effect, we're seeing a high sales ratio throughout the province. Now, this is the Vancouver Housing Price Index since the pandemic hit in March of 2020. You can see a bit of turbulence, but then prices really began to climb last year. What's going to happen if we're looking for 2022 forecast for the rest of the year? You remember all of my market determining factors. Well, some of them are actually starting to become a reality, and that is going to impact our market. The only thing that can happen for the market to continue to increase is no major tax changes, the interest rates remain low, and the inventory levels stay low. If those three things happen, we'll see a continuance of this crazy market and price increases. However, if we look at the negative factors on our market, if there are some federal tax changes, or they ban foreign home buyers, or a new variant comes out that's dangerous, or they ban blind bidding, and interest rates increase, that's happening, so we've turned that red. The BC cooling off period is actually happening, so that's turning red. Consumer confidence could fall, and then we could get that mass listing surge. So these will bring our market into a more cooler market. These will continue it heating up. Nobody knows exactly when it's going to turn, but things are happening very, very quickly. That's my market update. I'm Marty Pospisil. I hope you enjoyed it. Subscribe to my YouTube page and like us on Facebook, and I'll keep you posted. Thank you very much. Take care.